Welcome to the September 25th, 2020 video version of the Wagner Daily. My name is Rick Petticelli, and once a week this video replaces the written commentary portion of our report. Hopefully it serves as a nice change of pace, as well as offers some insight as to how we set up our charts, what time frames and indicators we use. As usual, we're going to run through a few broad market averages, then go into current positions in the model portfolio, and then we'll wrap it up by taking a look at a few stocks that are holding up well during this current market correction. First up is the Nasdaq Composite, which put in a constructive day, basically stopping the bleeding from Wednesday's nasty sell-off. Thursday's low was above the low of 921, so technically tomorrow will be day 5 of the new rally attempt in the Nasdaq. Hopefully the Nasdaq can just chop around here for a day or two and work off this nasty distribution day and attempt to push higher next week and possibly put in a follow through day. And on the weekly chart, it's just pretty much a normal pullback, about 13% deep, which is fine. And we're just looking for the price action to bottom out and eventually take out this downtrend line and reclaim the 10-week MA. On the S&P 500, a little bit of a different story. The swing low was broken and Thursday produced a higher close, so we have day 1 of a new rally attempt. But if we look at the weekly chart here, overall it's just a normal pullback, about a little bit less than 11% deep. What we're looking for is a downtrend line break and the price action to reclaim the 10-week moving average. Could these indices continue to sell off? Absolutely. But I try to avoid getting too caught up in trying to make projections as to where the market is headed. I feel that time could be better spent looking at stocks that are holding up, showing relative strength, looking at industry groups. But that's just what I like to do, and there's no right or wrong approach to this. And on to open positions in the model portfolio. We stopped out of BYND after this ugly false breakout, took out our stop at 148. We stopped out of TDOC, and these are partial positions. We're looking at TDOC after it cleared the 50-day MA and downtrend line on a pickup in volume. We bought on a pullback just above the 50 MA, and we were stopped out just beneath this the low of 922. In the short term, it looks like it needs more time to chop around. This price action is constructive unless it's unable to hold above 200 and sells off back down to this 184 level. We also stopped out of our tight stop in DDOG, which we originally purchased after the price recaptured the 50 MA on 921. We purchased a pullback around 86.50, which was a great entry point, and the price pushed about 7 to 8% higher from our entry, but stalled around 94 and sold off back down and undercut the 9-day EMA, which is where we stopped out, or just below the 9. So we'll have to see where it goes from here, but currently we're out. As for current longs, we still have a half position in pins, which we entered with an average price around 37.80, and we stopped out of half around 38.39. And we moved our stop to just beneath the low of this breakout day at 922. And so if it can hold the 9 and continue to push higher, we'll remain long. The other long position is FSLY, which we entered on a slight pullback after it reclaimed the 50-day MA on volume on 921. We bought a pullback to 92 prior to Wednesday's distribution day. And so far it's holding above the 50-day MA, but our stop isn't much lower here. And if the price can't hold the 50 MA, will be knocked out as well, and that is also a half position. So depending on the price action tomorrow, we may be back to full cash. Overall, the lack of follow-through in recent breakouts like BYND and pins is a sign to remain cautious. But as I mentioned earlier, a follow-through day could be just around the corner, so that could change quickly. As for stocks that are holding up well that are on our current watch list, all the stocks we covered a little bit earlier in this video are still on our main watch list unless they break down significantly below the 50-day moving average. We're also looking at CrowdStrike, especially if it finds support here off the 20 EMA and then tightens up in this area. SQ is another stock. Depending on how it acts, maybe it pulls back into the 50-day EMA and forms a bullish reversal candle. Maybe even a higher low than this reversal on 921. ESTC is another chart that's holding up well. We have a downtrend line break, and then we have this price action looking like it's tightening up. As long as it holds above 100 here, it would still be on our watch list even if it pulled back into the 50, but would then have to tighten up again. But overall looks pretty good. SC is an interesting stock as it's forming, well, it appears to be an ascending base type pattern. I have a pullback here, and a pullback here. So all these pullbacks are forming higher lows. This is the ascending base. And then the last pullback, it's more sideways here. The price action is holding above the 20-day EMA and will likely remain on our watch list unless it breaks the 50-day EMA on a pickup in volume. NEO also looking pretty good. Just might need a bit more time maybe to chop around in here and eventually break this downtrend line. And NET recently reclaimed the 50 EMA on a pickup in volume and has pulled back to the 50 EMA today. So if the price can hold above the 50-day EMA minus some wiggle room, say down to the 20-day EMA intraday, that would be a bullish sign. And the last chart of the video is NOVA, which has formed a cup with handle pattern. The cup is about 36% deep. The handle is a little bit under 11%. Currently finding support at the 50-day MA. And you can see it's already made a higher high here in the RS line, while the price made a lower high. So it's showing relative strength versus the S&P. And again, this is just something to keep an eye on for when broad market conditions improve. Just a quick recap. Market conditions are still unstable. However, leadership stocks have shown some life this week, which is a positive. But we're not here to buy stocks that just hold up really well and go sideways. The point of buying stocks is so that they go significantly higher. And that's going to be pretty tough until the broad market conditions improve. If you're in positions that are holding up, fine, remain long. If you're in positions that aren't doing well, obey your stops. If you enter anything new, try to go with a tight stop and reduce share size. There's no need to be trading heavy right now. All right, thanks for joining us. Have a great weekend, and we'll see you next week.